I never knew much about Chamath Palihapitiya until I saw a bunch of people calling him out on Twitter, or should I say X. I started doing more digging, and it wasn't just the Twitter community that was angry with him.
People saying that he really took advantage of investors.
He, by the way, pitched deeply unprofitable companies to retail investors as SPACs.
And then what a guy like Chamath would do is he'd get everyone excited, people buy in, the price goes up, then he gets out after he just told you it's like the greatest company to ever own.
If you look at all of the wealth that he's gained going in and all the wealth that shareholders have either gained or lost going out, I just think there's, in the end, going to be a pretty big imbalance there.
Silicon Valley's biggest fraud, Chamath Palihapitiya. He is quite literally the biggest pump and dumper on the stock market that I've ever seen.
The most notable among all of these is Mark Cohodes. So you might recognize that name from a scandal that happened almost a year ago. Cohodes was the first person who initially exposed Sam Bankman-Fried with his FTX fraud. The question is, why is Mark Cohodes now calling out Chamath Palihapitiya? At first glance, Chamath has everything going for him. Billionaire, former Facebook executive, host of the successful podcast All In, big donator to climate change. On paper, he looks like a benevolent billionaire. So what has he done to gain the attention of Mark Cohodes? To get your head around this, you need to understand what a SPAC is. So you might vaguely remember SPACs from about 2 years ago, where they were extremely popular in the bull market. And there was one person that they were calling the SPAC King.
Chamath has really become like the poster of the SPAC boom.
The so-called SPAC King.
The 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 SPAC King.
I think that SPACs are very much here to stay. It evens the playing field. It democratizes access to high-growth companies.
SPACs have been around for decades, and in the past, they've had a bad reputation for scamming investors.
It allows retail folks that may not have necessarily been tier one hedge funds, now they can also play.
SPAC executives receive ultra cheap shares for taking companies public that increase their returns. It's a bona fide pump and dump.
I think what's happening in SPACs is really about the dismantling of the traditional capital market with respect to fundraising.
They have never been a good investment for individuals. They're great for sponsors. They're great for somebody as successful and charismatic as Chamath.
Another example that I've been at the forefront of is in SPACs. If I was zealous about SPACs, you wouldn't have seen the change in the capital markets that we've seen.
SPACs have attracted many dodgy companies over the years. We've seen instances of SPACs acquiring private firms that have been fabricating aspects of their business, leading to large losses for investors later down the road.
A SPAC stands for Special Purpose Acquisition Company, also known as a blank check company. I know it sounds sketchy already. What happens is a sponsor raises money for investors to put into this blank check company. Once the money is raised, the sponsor must use it to acquire a target company that he believes has a lot of potential. When the business has been approved, the SPAC and the target business combine into a publicly traded company. It's a bit of an odd process, but it's meant to be a way for companies to go public while bypassing the regulatory hoops and hazards of the traditional IPO process. The big problem though is investors have to put so much trust into the sponsor of the SPAC. You literally have no idea where your money is going, so you put your complete faith into the sponsor to use your money wisely and acquire a business that will perform well in the future. This is where Chamath comes into play. He was the sponsor for a lot of large SPACs, and a lot of investors trusted him with their money.
Recently, he's been very active in the realm of SPACs, special purpose acquisition companies.
Companies should be going public sooner.
You know, he sponsored SPACs that merged with startups like Virgin Galactic, Open Door, Clover Health, to help make him a billionaire. 2
years ago, Chamath had a good reputation both as an investor and businessman. He'd worked as a senior executive at Facebook. In 2010, he turned a $25 million Golden State Warriors investment into $520 million. He invested early into Amazon, Tesla, Slack, and many more high-growth companies. He would leverage this reputation and use it to sell SPACs that he was sponsoring. A few years ago, he went on this kind of weird marketing campaign where he would appear on CNBC and he would only pitch to investors his SPACs.
Chamath Palihapitiya announcing here on Halftime his latest special acquisition company.
We are really excited after months of diligence and work to announce a merger between IPOC and Clover Health. A merger between Social Capital Hedosophia or IPOA. The news is that IPOB is merging with Open Door. This is a market that is growing by $1 billion every single week. I actually think this is one of the safest and most interesting investments that I've ever made. I have never had visibility to a market like this with this kind of defined, measurable growth. I think this is one of the most interesting, value-laden investments that I've seen in a long time. And it's a merger that really creates an opportunity for investors. I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year.
It's now been 2 to 3 years since he offered those SPACs. Let's see how they have performed. Was Chamath the right person for people to trust with their money? Because in hindsight, a lot of retail investors now wish that they never stumbled upon the words Chamath or SPAC or investment opportunity. Chamath took 4 major SPACs public, which all of them he had big projections for. The first was Virgin Galactic, which originally came under the ticker symbol IPOA, Open Door Technologies IPOB, Clover Health IPOC, and SoFi Technologies IPOE. What happened with these 4 SPACs? Because the way Chamath was promoting them, it was almost as if they were the FANG stocks of the future. October 2020, Chamath announces on CNBC that he is taking a company public through a SPAC called Clover Health. At the time of the SPAC, Clover was a small insurance company with a pretty traditional business behind it, but they wanted to turn things around because they had this big vision. They would transform healthcare through their new software called Clover Assistant, which they believed would make the company very valuable. And to start with, the stock actually does very well as Chamath begins his promotion tour of it.
We are really excited after months of diligence and work to announce a merger between IPOC and Clover Health to take Clover Health public. I have never had visibility to a market like this with this kind of defined, measurable growth. This was one of the most straightforward investments I've ever made. It's a business that I think will become extremely valuable and be what I think is going to be our next 10x and 10-year investment.
But then it starts to come out that this stock is not as groundbreaking as Chamath is making it out to be. On the 4th of February 2021, a report written by Hindenburg Research accuses Chamath of luring investors into a broken business and not disclosing that the Department of Justice is actively investigating Clover of deceptive business practices. It goes on to detail that the company is riddled with an unethical past and is involved with some pretty sketchy business behavior. And Clover, they quickly respond to this. They immediately dismiss the report, saying, Chamath and Clover were fully aware of the DOJ inquiry, but we concluded that the fact of DOJ's request for information was not material and was not required to be specifically disclosed in our SEC filings. So let me make this clear. This government investigation of your company is not material, yet Clover derives almost all of its revenue from Medicare, a government payer. If that's not material, then what is material?
They're saying here that their underwriters understood it, that the lawyers understood it, and that they deemed that it was not quote unquote material to disclose.
Smells crappy with everything going on, and so retail, the poor retail people that might have been involved in buying the SPAC that they didn't need to know, Andrew. I mean, and Chamath, Mr. Retail proponent, I'm a billionaire, but I love you and I'm one of you. It just reeks.
February the 6th, 2021, Chamath also issues his own response to the Hindenburg article, and he called it a cheap path of screaming into the ether. I will let Clover's long-term performance speak for themselves going forward. Well, it's been 2 years since then, so let's see how Clover's long-term performance has actually gone. From that date, Clover is down 91% from a share price of $13 to just over $1. To put that into perspective, if you were a retail investor who put your savings of $100,000 into Clover, you would now be left with $10,000. To get back to your original amount, the stock would have to increase 900% in price. Do you ever wonder why Warren Buffett's #1 rule to investing is don't lose money? Because it's very hard to get your money back. With his SPACs, Chamath would issue these one-pager Twitter reports on his investment thesis on the particular SPAC that he was selling. He said, with regards to Clover, that he expected by 2023, Clover's total members would reach 589,000, the enterprise value would be $3.7 billion, and that's...
By 2023, we will have overall profitability.
Well, at the end of 2022, we can see Clover had 88,000 members, and today its enterprise value is $300 million, so basically a tenth of the size of his original estimates. Also, the company is losing $300 million a year and has not had one profitable quarter yet. It just shows you should be very careful when people make these outlandish, bullish estimates, and especially when their agenda is to sell you a stock. While issuing these SPACs, Chamath was selling himself as the professional investor. At the October 2020 investor presentation, he said, "Clover has been diligenced and validated not just by me and my team at Social Capital, but by some of the most respected blue chip technology investors in the world."
You know, he's there to potentially be the guy who does due diligence on this.
In fact, I felt so confident after doing the diligence.
So either he had done very deep research and just somehow missed that Clover was under investigation for deceptive business practices, misleading marketing, and a slew of other issues, or he knew about these, but for some reason decided not to mention them. Charlie Munger always says, "Show me the incentive and I'll show you the outcome." It turns out that there was a very strong incentive for Chamath to take Clover Health public as one of his SPACs. In the prospectus behind the pages and pages of writing, you can see that his firm, Social Capital, invested $25,000 in exchange for 20.5 million founders' shares for promoting Clover. Those shares at the time were valued at almost $290 million. If you told most people that they could invest just $25,000, do some promotion, and then get $290 million, they would probably be willing to go to a lot of lengths to get this. But Chamath was already rich, yet still sold his reputation and these failing SPACs to retail investors for a very handsome profit. But remember, Chamath had 3 more SPACs that he issued to the public. How did these go? It turns out that these other 3 SPACs would... In September 2020, Chamath found a merger for his SPAC IPOB, a stock which he had grandiose expectations for.
IPOB is merging with Opendoor, and Opendoor will be going public, and it's a merger that really creates an opportunity for investors, and I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
The SPAC began trading on the Nasdaq around mid-December 2020 at a price of around $30. Today, it's $3.20, down 89%. I'm no Elon Musk, but I'm not sure this is the next Tesla. IPO-A was Virgin Galactic. Virgin Galactic may have taken people to space, but it took its investors in a different direction.
I actually think this is one of the safest and most interesting investments that I've ever made. In fact, I felt so confident after doing the diligence that I decided to invest in an additional $100 million of my own money. It's a kind of a business that's very rare and unique, very difficult to build, not a lot of competition. So I don't think it's a moonshot at all. In fact, I think this is one of the most interesting, value-laden investments that I've seen in a long time. And then the team that George has built that's been able to build something that is largely now de-risked.
And we think that we're going to have a tremendously profitable business within a couple of years.
Today, the price is $2 a share, but Chamath cashed out of the company when it was $25. So again, Chamath walks away with a very healthy profit.
The venture capitalist Chamath Palihapitiya, head of the SPAC that took Virgin Galactic public, who, by the way, was like, hey Scott, I mean, this is a great company. You got to get in on this stuff. He made $310 million from selling shares of the company, and this is a company that he's out promoting about how great it is. It's the greatest thing ever.
This is one of many examples which has left a lot of people calling him a pump and dump merchant.
It's a bona fide pump and dump, right? You get someone to go out here and talk about how great this company is without having to show the same kind of transparency you'd have to if it was, a publicly traded company.
A pump and dump is when a trader hypes up a particular asset class that he is invested in order to get others to invest in that asset as well. This causes the price to increase. The trader then sells when the price is high, when others are buying, making a nice profit, and he leaves the other investors to take a loss. It's a very popular tactic in the crypto space where many coins don't have real value, so they have to pump and dump it, but it's not a foreign strategy in the stock market either.
Guys, you all know I'm a fan of the pump.
Always, guys, respect the pump.
But what I'm not a fan of is a pump and dump.
The last SPAC of Chamath's was SoFi, IPOE. Did at least this one perform well? Okay, so SoFi became public through a SPAC June the 1st, 2021. Okay, SoFi stock, June 2021. Since then, it is down 60%. So that's 4 SPACs in total. One's down 82%, another 89%, Clover 91%, and the last minus 60%. These are the SPACs from the man who's already done the due diligence and is on the side of retail investors. It's quite ironic when the exact guy helping retail investors loses them millions and millions of dollars and at the same time makes money from it. And rightly so, this has left many retail investors angry at Chamath, to such an extent that Chamath would address them on Twitter. Finally, a well-deserved apology for all of those who lost money, right?
No.
Chamath responded by saying, he didn't inflict any losses, but you literally went on Twitter and TV to sell to investors SPACs, which all of them lost money. He then said to the victims to stop being a victim, the world will pass you by. Yeah, I made hundreds of millions of dollars and you lost money, but you need to stop being a victim for losing money.
It's just money. It's made up.
He finished it off with this. I'm in the arena trying stuff. Some will work, some won't, but always learning. You're anonymous and afraid of your own shadow. Enjoy the sidelines. Yeah, you guys are all just terrible people sitting on the sidelines. I'm in the arena actually doing something. What are you doing? Selling SPACs that lose 90% of their value so that I can make millions in promotion fees. Call me crazy, but I think it's better to sit on the sidelines compared to working hard to lose retail investors millions of dollars.
Here, I just wanted to take an actual direct line of attack on people who are constantly blaming others for everything. And if you aren't trying and iterating, you're a fucking loser. Go out and try something.
Yes, Chamath, we all know that there's a lot of losers on Twitter who just tweet all day and do nothing. But what about the people that work hard all day with their 9-to-5 job who lost their savings because they trusted you? You can't just place them all in a basket of Twitter losers. Even if they are just losers, why should you get to scam them?
Similarly here, on the deals that I do, I take a 20% carry. And I think that I can find targets and find opportunities that will make that more than reasonable in the final analysis.
And over 25% of the SPACs that were introduced in 2021, they're now trading below $2.
Open Door, SoFi, Virgin Galactic, and Clover, they have all lost 60% or more of their market value.
It's written that Chamath made roughly $750 million across all of his SPACs. Ironically, the SPACs did very well, but not for the investors putting money in, but for the sponsor of the SPAC. And I think going forward, anyone who hears the word SPAC or Chamath or Palihapitiya are going to be a lot more cautious before buying the next thing that he decides to sell.